What's going on, guys? It's Henry. I missed you. It's been a whole week since I posted and I'm finally back. I hope you're doing well. In fact, you probably are, since the NIO stock hit over $50 per share today. And today it peaked at $54.20 before falling below 50 again. What the heck is going on? I guess your boy with Goldman Sachs and hedge fund experience picked a winner for our family to get stupid rich. Well, today I'm talking about some big NIO news. What's the latest and greatest with the Tesla of China, and why does it seem to be the hottest stock right now? I've uncovered some game-changing information that I want to share with you guys. And I mean China messing with Tesla a little and giving NIO that extra little boost to help it dominate. What is that boost and how much is it going to help a NIO stock? Stick with me, you're not going to want to miss the end where I do NIO technical analysis and I tell you guys what the options market is saying about NIO. Before we dive in, remember, smash the like button because, well, these research videos take a lot of work and it does help out the channel. Taking a look at this stock and my previous thumbnails, we're in the 50s, baby, or at least we were in the 50s earlier today. Chinese stocks are outperforming the S&P 500 by a wide margin. Here's a chart of NIO and XPeng in relation to the S&P 500, and oh my goodness, this chart just looks broken. It doesn't even look real. XPeng is another winner in China, by the way, because they're differentiating themselves from the competition and investors are also getting excited by XPeng. I'll cover XPeng in the next video, so make sure that you're subscribed to the dopest family if you don't want to miss that video. We first need to talk NIO. We know NIO is a Chinese company set up in a strong market right now. Additionally, NIO is well positioned in the Chinese market as China is making a push towards no gas vehicles by 2035. Why is that important? Because, well, we get closer and closer to 2035 every single day, and that future is almost here. The EV vehicle demand in China will skyrocket as we continue to go from today, 2020, to 2035. Not only is China making the push for clean vehicles by 2035, but their government plans to provide a subsidy of $4,000 to people who purchase EV vehicles. However, there is a stipulation with this subsidy. You only get the $4,000 subsidy if you do not purchase a luxury EV vehicle, unless that luxury EV vehicle has a swappable battery. Hold up a second here, Tiger. You're telling me swappable battery? Well, who has swappable batteries? Well, remember when I covered NIO battery as a service? Basically how there's all these shops in China, a NIO vehicle can stop by and just get its battery replaced in a matter of minutes and keep driving over 300 miles thereafter until it needs another battery swap. Well, China figured out a way to one-up Tesla. For every smart move, there's always another smart move to be made. And wow, did China just put the ball in NIO's court. This swappable battery advantage gives NIO the capability to have a $4,000 subsidy, but Tesla, they cannot have that subsidy. This is a game changer because it puts $4,000 into each NIO EV purchaser's pocket, whereas that is a significant advantage over Tesla because they have very similar pricing. This excludes Tesla from that potential subsidy because Tesla does not have battery swapping capabilities, but since NIO has a swappable battery, it makes it eligible for a $4,000 cash subsidy right off the bat for every single purchase, since I think most of their cars will be swappable batteries. This push towards EV vehicles in China is going hard, and if you think about it, 2035 isn't that far away. In the grand scheme of things, 15 years is nothing. That EV demand is already starting right now and is going to continue pushing, not just for China, but globally, and I predict it will be exponentially higher within just 5 to 10 years before we even hit 2030. So what is the latest and the greatest with NIO as a company? Let's talk about the news and updates that are helping push this stock to reach the 50s. So let's jump into that right now. NIO shares have been the hottest talk in town following a wave of endorsements from Wall Street analysts. And when the analysts talk, people listen. In actual production news though, NIO revealed record-breaking deliveries for the month of October 2020. In fact, NIO deliveries were 5,055 EVs in October. This cumulative October 2020 delivery numbers mark an increase of 100%, in fact 100.1%, relative to October last year. Year to date, the company has delivered 31,430 vehicles. And what does that tell us, guys? What does that tell us about the stock? NIO has been ramping up production capacity capacity. It's been absolutely killing it, and it will continue to boom and make more money. Earlier in October, the company's CEO indicated that the company's production capacity would double to 300,000 units per year, corresponding to a monthly production capacity of 25,000 units by the end of 2021, which is basically 12 months from today. In terms of stock numbers, let's talk about these attractive Wall Street endorsements. In mid-October 2020, JP Morgan analyst Nick Lai set a new June 2021 price target of $40 per share for NIO shares on the basis of a 3 times enterprise value, or EV to sales estimate for the year 2025. And he put a $40 price target. I put a 43.95 price target. In my DCF model, I put a $50 price target on a thumbnail. Who knows what the actual value is, but it really does seem that between $40 per share and $50 per share is the range that NIO will be trading at right now, given all the news and financials that they have currently. JP Morgan had noted that NIO would be able to capture 7% of the cumulative EV market and a whopping 30% of the premium EV segment by 2025. And in late October, Morgan Stanley called NIO a strong EV leader in the making, raising the stock price target to $33 from the original $20.50. Morgan Stanley analyst Tim Sao, I hope I pronounced that right, based this upgrade on better than expected Q3 deliveries, margin upside potential, and you know how important margin is, guys. We've talked about that with Tesla stock and why it's rising, because its profit margins are going up to the 28% level. That's going to be a really important factor for NIO as well. NIO shares hit a record high of $54.20 today, and they are cooling off now, but year to date, the stock has generated a gain of over 1,100%. In July of 2020, shares surged 22% during one session after reporting 179% for its June sales. When it comes to financing since the pandemic, NIO has secured funding and received cash infusions, which have largely removed any liquidity risk for the company between now and their expected break even in 2022. NIO is getting a tremendous amount of love from government, and I suspect the battery swapping advantage is purely for NIO versus Tesla in China. Tesla must be pissed, and China is a super competitive country and is very capitalistic. Beyond popular belief that they might be not capitalistic, they are. They are the biggest capitalist in the entire world, and NIO has the best economy to work with in the entire planet for a growth engine. Not only has NIO been growing its quantitative production capabilities, but the company plans to invest $1 billion in developing autonomous driving chips, another Tesla growth engine that NIO is adopting. This process is still in the early stages, but NIO seems to be following closely behind the footsteps of Tesla. Of course, with anything in the stock market, there are risks involved. While NIO is a potentially strong EV leader in the making, and it is growing during this uncertain time, it's getting riskier to invest in. There's no 100% guarantee of what will happen, but when thinking about investing in NIO, here are some risks to consider. The biggest risk indicators right now for NIO is that it probably won't be profitable for another couple years, at least until 2022, most likely. Next, NIO is not self-funded right now, and that makes it a little bit riskier because it is relying on outside capital at the moment. If NIO is something that you're looking to invest in, it might be the best to think about it as a growth stock in the next 5 to 10 years, rather than just looking at it today or what will happen in the next week or two, because that is a very hard thing to predict. Let's talk about what I'm going to do with the latest numbers and what's going on with the market and the world as a whole. I plan to be cautious on NIO until it pulls down to at least $43 per share, or $43.95 according to my DCF model. I'm happy we're all getting stupid rich, but also being cautious on a stock that looks like a rocket just makes sense to me right now. I don't think it matters if we have a new president or anything like that. I think it all depends on the sales that keep coming in for NIO. The path to profitability is the strongest force for the stock moving higher every single quarter. And as always, with stocks, you have to do your own research, since nobody on YouTube is able to give advice, and I certainly am no different. But if you want my cheat sheet, here's my technical analysis breakdown, and I want to show you guys some option analysis as well in this video. Whoa, look at that chart. It's insane. That's the chart that I was talking about earlier in this video. We got Xpeng, NIO, and, well, the S&P 500. It's looking very sad. Anyway, NIO is crushing it the hardest, and let's look at the 3 months. It just looks like an absolute spaceship, and so does Xpeng, by the way, but that's in the next video. I'm gonna get rid of Xpeng, I'm gonna get rid of the S&P 500, and just looking at the NIO stock chart itself, Well, it has hit $48 per share. All right, I just had to refresh my screen because it's hard to believe this stock, what it's doing. Now, I'll talk about the good news and the bad news. So the good news is this stock has a very high momentum score. It's just rising at a very rapid rate because there's a lot of good stuff going on. Investors are piling in. You would think that there's some hype, and there absolutely is some hype, but the momentum is sustained. It's continuing and it's not getting that much weaker, so that is a very positive sign. Looking at the moving average, it's absolutely insane because it's like half of the current stock price, so there's a whole big difference there. The volume is very healthy. The stock started going up on very high volume right here over in the October time period, and it just has not stopped. The volume did decrease a little bit and we did have some consolidation, but then again, the heavy green volume started, and now we just had a heavy green day just yesterday, and today we're having a little bit of a red day, but honestly not by much, and it's not very conclusive just yet. I'm not convinced that this stock is going to go down. It's going to maybe trade sideways a little bit, but the momentum long term is just absolutely ridiculous. Now looking at the RSI is basically telling you if there is an overbought signal or an oversold signal. It is telling me that it is a little bit overbought at 80. It is a little bit too hot at the moment. However, RSI is just one indicator, and that's not conclusive of what's going to happen with NIO stock. Looking at the chart, that's really all I have to say. I mean, it's hard to say anything else. This stock itself is just on an absolute tear, and you can't really see anything on the technical charts because the stock doesn't really trade on technicals. It just trades on complete and absolute news and hype at the moment. However, I think it is important for us to look at Robinhood. Okay, so here's Robinhood. I'm looking at buying some call options and looking at the money 48 strike calls. The premium is stupid. I mean, it's ridiculous. It's over 10% in just 1 week. So as you can tell, there's a lot of investors that are willing to pay a very high price on a NIO continuing to move higher. I'm gonna look at the 50 strike because I bet that's really popular. And I'm sorry, I'm just having an awkward moment because like, I knew that the volume was gonna be high, but 40,000 volume, I mean, that's something like Apple stock. That's just insane. And as we even look at this, the volume continues just to rise. The open interest is insanely high as well. But it looks like a lot of the positions were open this week, and maybe that's because a lot of people are trading weekly options like I do. So what this is telling me is a lot of people have a ton of interest. The bid-ask spread is phenomenal. The volatility is just insane. Just to give you guys some perspective, Coca-Cola has about 25% volatility on their options. Tesla is probably 75, maybe 100 on some of the more volatile weeks. This is 200. What this tells me is this stock is like the riskiest stock. It's literally the riskiest stock in the market right now. And you know, I'm not BSing you here. This implied volatility is telling you that this stock is moving up and down a tremendous amount, and you don't want to have all your money invested in just this. However, there's a whole lot of opportunity to be made in the options market on NIO right now. 50 has a tremendous amount of attention. Let's go to the 55 calls. 55 calls have a little bit less volume, but still a ton of volume. People are betting that this stock is going to go from 48 to over 55 just next week. That's great. Let's look at the 60s. The 60s, it's just not slowing down. 35,000 volume again. That's insane. When does it stop? I mean, 65? It's dying down, but still not that much. In just a week, it's not crazy, guys. 19,000, and all of it was open today on the 70 strike with zero open interest. All of it was open today, and there still is some premium to be made. $121 is not a little amount in 1 week on a stock that's $47. That's just mind-boggling to me what the implied volatility is. I seriously am probably going to make a trade over on Patreon with an option on NIO because it just makes so much sense. Now let's take a look at buying some put options. Let's see if there's any bearish behavior in here, and I'm sure there is. I mean, there has to be, right? I mean, people bet on stocks going both up and down. So let's look at the 45. So the premium isn't as high. As you can see, it's kind of really close to the money, but the premium isn't quite 10% because 10% of 45 would be 450. So it does seem to me that there is demand for buying puts, but it's lower. I mean, it's significantly lower. Look at that volume, it's just not as high. So the put to call ratio is pretty low. I mean, there's way more calls being bought than puts being bought. And that is a very bullish indicator because people are betting on it going up rather than it going down. So implied volatility is still high. Let's take a look at what the volume looks like at the 40 level. I assume it's a little bit aggressive. Okay, did not expect that. It is about a 5% premium, which is decent for a volatile stock like NIO. It's a lot of premium to be made, so if you want to sell some puts, that's probably what I would do for next week. In fact, I probably will do this. This might be one of my trades. The volume is 18,000, which, is that higher than the 45s? That is higher than the 45s. I don't know why that is. I think it's because 40 is a very even number, and because NIO was just there not too long ago. And I think people are thinking that if NIO does fall, it will fall significantly. So they're betting on it going to 40 rather than 45. So they're more comfortable buying the 40s, because if we do see a pullback in NIO, let's be honest, it is going to be pretty large of a pullback. So the 40 seems very hot. Let's go down to 35. I'd be surprised to see 35 more volume traded than the 40, but who knows at this point with NIO, but I am gonna bet it's gonna be less. Yes, it is significantly less, and the volatility is just a little bit lower, but it's about the same. That being said, I'm not gonna drag on this option analysis too long. I just wanted to show you guys that there's a lot of buying pressure in NIO, especially in the call side, and there's more volume traded on the call side than the put side, and that's a very strong indicator that, well, NIO is being loved by its investors, and we're likely to see, you know, probably some more upward action. If we do see some upward action, it's going to continue being really crazy. And if we see some downward action, it's going to drop like a rock. I don't think this stock is just going to go sideways, because there's just so much enthusiasm and it has to do something. I'm not sure what it's going to do, but the calls do say that it's going to move up to at least 55. And there's a ton of people betting on that happening. So I guess it'll be really interesting to see what will happen. And I will do a follow-up video very soon. Enjoy your weekend. I'll be back with an Apple DCF and an XPeng stock analysis very soon. Don't forget to subscribe and smash the like button. I love you. I'm happy to be back after a whole week-long break while I was working on the students in the Weekly Option Income Academy. I'm so excited to be back on YouTube, and I have so much planned to go. And all I have to tell you guys, and all you have to do for Uncle Henry, is be aggressive in learning, but be safe in investing.
No one ever sees me.